It's really important to be willing to invest money at risk in early stage ideas. A lot of the benefit that the world has had from technology in the last few decades has come as a result of venture capital investing in it. And, as we were saying earlier, as a result of governments buying some of that stuff, as well as commercial customers. So I think the principle of doing venture capital, putting money at risk, supporting innovation is really, really important. It's probably become a bit fashionable to do venture capital. There's certainly a lot more people doing it. There's a lot more money at play. And I think doing it smartly and doing it well, where the definition of well is, do you make a lot of money for your investors? That's actually relatively challenging. It's a lot harder than some people might wish it to be. So, as I'm sure you understand very well, the number of venture capital firms that are actually really financially incredibly successful is very, very small. It's a tiny, tiny fraction of the total number of companies doing venture capital. And so it's really important for investors to pay close attention to the returns they're getting. But, for example, European venture capital firms have done equally well in generating returns in the last few years as US firms, in some cases better. And on the other hand, some of the biggest brand name firms deliver such amazing outliers periodically that you just, you can only admire their performance. And very, very few firms do that. So it's not a democratization thing. It's not that venture capital's got easier or that it's even an easy thing to make money in. It's very important to pay attention to the performance of firms and actually to accept that it's almost as risky running a venture capital firm as it is the investments that it makes. That you'll probably lose a lot of the money. A lot of the investments you make in VC funds, you probably lose the money in just the same way as those funds themselves lose it in investing in startups.